What's up guys, Ben here and welcome to Motivation to Invest. When stocks crash or correct, everybody should have a shopping list. These are stocks which you know, which you've researched and you may even already own. And when they crash, you already know the fundamentals, you already understand the businesses, and you can assess whether the news which has caused these stocks to crash has affected the fundamentals massively in the long term. Then you can make a great investing decision. So in part one of this video, I'm going to go over a stock which recently plummeted by over 20%. And then in part two of this video, I'm going to go over some technical analysis and look at the stock charts for a few other stocks which have also plummeted recently and see if we can identify some great buying opportunities. So what is this stock? Well, the stock is Beyond Meat, ticker symbol BYND. This is a Los Angeles-based producer of plant-based meat substitutes, and it was founded in 2009 by Ethan Brown. The company has a range of products such as Beyond Burgers and has even trialed Beyond Chicken with KFC. The products of this company took the internet by storm, as many people couldn't tell the difference between the plant-based burger and the real burger. Now, this is great for meat lovers and vegans alike, because it means people now have an option. Those who like the taste of meat can still buy a plant-based burger with Beyond Burgers. Now, I did a full video analysing Beyond Meat, and I also compared it to one of its competitors, Impossible Foods. So be sure to watch that video. I'll leave it in a link somewhere here and in the description if you want a full analysis of the stock. But in this video, I'm going to go over the news and why the stock has plummeted. Diving into the share price here, we can see Beyond Meat has dropped by minus 17%. And also, if I take this chart from its high on the 9th of October, the stock is down by almost 36%, which is massive. Now, bear in mind, this is a small cap company. I believe it IPO'd in 2019. Looking at this chart here. So it's not been on the market long. There has been a lot of short-term volatility. The stock was up at $234 during the IPO, and then it dropped again to around $66 a share, and then it hit $195, and now it's back down to $124. Now, full disclosure, guys, I did have a position in the stock, and I still do. The great news, having just checked my account, is I can see that I actually purchased this stock at around where it is now, $124 per share. So I believe I got in probably here, maybe in September or even July around here, $127. And then it shot up. I made some nice gains, around 50%. And then it's back down to the same levels again. So the real question is, should you increase your position in this stock? Or is now a great time to open a new position? Or should you avoid the company completely as it's going to drop much further? Well, I'm going to answer those questions right now. So why is the stock down? Well, this is due to the Q3 earnings and an issue with McDonald's. So first, let's look at the earnings. So the company actually reported revenues of $94.4 million and a loss of 28 cents per share. However, this stock was priced for perfection, and analysts expected $132.8 million in revenue and only a loss of 5 cents per share. So that took them by surprise, and thus many sold out. According to a statement by the CEO, Ethan Brown, our financial results reflect a quarter where for the first time since the global issue began, we experienced the full brunt and unpredictability of the global issue, and our net revenues got hit accordingly. They also stated about stockpiling of their goods. So unlike the second quarter, where record retail buying and freezer loading by consumers offset the deterioration of our food services business, now the long tail of the retail stockpiling by customers, coupled with continued challenges across a majority of our food service customers, led to Q3 results which were much lower than expected. So I'm not going to sit here and say the company isn't going through major problems, because it is. With lockdowns all over the world, especially in Europe, this company's restaurant customers have been hit massively. And then if we analyze the supermarkets, we can see that Beyond Meat products are usually at a premium price compared to normal meat products. So if people are strapped for cash, if people are losing their jobs, they're going to be less inclined to purchase these vegetarian substitutes. So to put things into perspective, most young growth companies go through these issues. We've seen this with Amazon. They were losing massive amounts of money on every single prime customer. I believe around $400 per prime customer around 10, 15 years ago. And now look where they are today. We've seen this with Tesla. They were unprofitable for many quarters. They nearly went bankrupt. And now look where they are today. So maybe Beyond Meat could become another historic growth stock, or it could go the other way. So the only time will tell in this situation. So now let's look at the good news, which is also a little bit strange. So it's been widely known that Beyond Meat has been a strategic partner with McDonald's in trialing their meat substitute burgers at McDonald's across Canada. McDonald's stated that they would release a plant-based burger, which is great for Beyond Meat, but they wouldn't be calling it the Beyond Burger, they'd be calling it the McPlant. Now this also sent the shares tumbling. I believe the CEO of Beyond Meat was expecting McDonald's to call their burger the Beyond Burger, or at least credit them in some sort of way. But it seems that McDonald's wants to keep this quite generic and wants to use a generic name. Now really this won't affect the revenues too much if McDonald's decides to use Beyond Meat to roll out meat substitute burgers across the world. They'll still get all that revenues from supplying the burgers, but because their name won't be attached to the burgers, they won't get the benefit of the extra branding, which would have been fantastic for the business and for the stock. So on the Q3 earnings call, analysts pushed the CEO, Ethan Brown, for answers. He stated, "Our relationship with McDonald's is really good and really strong. I respect their decision to refer to the McPlant platform in the generic sense. We are working with them on a number of matters." So really everything does hang on this major deal. It seems like McDonald's are keeping their options open, especially when it comes to branding. But to me it seems like Beyond Meat and McDonald's are a natural fit because they've done trials together, they're working together. So why would McDonald's suddenly change to an alternative supplier for its rollout? But anything can happen, and it could come down to costs, it could come down to branding, or any other issue in between. So that is a major risk with this investment, but it also could mean major upside if Beyond Meat is chosen officially for McDonald's global rollout of the vegan-based burgers. On the plus side, Beyond Meat is still doubling down on expansion, which does seem very intriguing. So Beyond Meat is doubling down on its expansion plans by acquiring a new factory in Pennsylvania and its expansion in China and Europe. Brown also pointed to other data which suggest the business is growing. He stated, "We continue to see strong growth in critically important metrics of household penetration, buyer rates, purchase frequency, and repeat rates. Our brand sales growth continues to outpace the category during the quarter." So this is a really interesting play, and let me just show you why the vegan industry is important. So let's dive into this research here. So according to Grandview Research, the global vegan food market size was valued at $12.69 billion in 2018 and is projected to expand at a compound annual growth rate of 9.6% per year from 2019 to 2025. This is due to increasing awareness of the benefits of following a vegan diet and also the ethical benefits. North America, Europe, and Asia Pacific particularly have a large vegan population. So the real question is, should you buy Beyond Meat at these levels, or should you wait, or should you avoid the stock entirely? Well, personally, I'm holding my position at the moment, as I believe there will be continual volatility, especially if the US decides to go into a state-by-state lockdown, as that will affect US restaurants massively, and thus Beyond Meat's sales even more so. But if Beyond Meat does drop much further and does take an even bigger hit, then maybe I will increase my position in the stock. To me, this is still a long-term play, with restaurants still struggling and consumers being more mindful of their buying habits in the short term. But as the economy starts to reopen and restaurants start to reopen and people start to get back to normal, then I believe stocks like Beyond Meat will start to fly. So what are your thoughts? Are you buying Beyond Meat stock right now, or are you waiting for a further drop? Let me know in the comments below and I'll join in the discussion. But let's dive into a few more numbers for Beyond Meat to see what makes this stock interesting and just to give you guys a little bit more perspective. So here we are, guys, we're on Stockopedia. This is the platform I use all the time to analyze stocks. If you wish to check it out and see if it fits your investing style, I've got a 25% off discount link exclusive only for you guys, the viewers of Motivation to Invest. So if you wish to check it out, links in the description and see if it fits your investing style. Here we are, Beyond Meat consumer defensive, speculative, large cap, neutral. So it's got a very low stock rank of just 39. Generally, I look for around 70, so this is very low at the moment. Valuation is still not very good, and the company is still losing money, which is why the quality level is quite low. So it doesn't look good from a stock rank point of view, but let's dive into a few more details. So we can see the growth rate is massive, and that's what this company is about. 164% compound annual growth rate on the revenues. And its competitor Impossible Foods is also not publicly traded. So anybody who wants to invest in this vegan market, this meat substitute market, generally looks at Beyond Meat. So that's great news for the stock. CapEx, so we can see the CapEx is increasing. They're doing a lot of investments. They're working on new factories. They're building, they're expanding. Revenues forecast to increase to 2021 to $747.7 million. Net income forecast to increase to $39.1 million. Earnings per share is forecast to increase by nearly 6 times by 2021. Analyst consensus, I believe they are very similar to me here. 9 hold, so mostly holding the same as me. 1 buy, 4 strong buy, 7 sell, 1 strong sell. People here from Credit Suisse, Morgan Stanley, JP Morgan, all over the shop. Sales growth 68.53%, which is fantastic. Current ratio 6.48. Plenty of cash to cover the short-term debts. Generally, I look for at least 2 on the current ratio. This has got a 6, which is fantastic. Price of sales is 23.44, so you're paying 23 times the company's sales, and that's what's priced into this stock. I'm also going to show you the balance sheet real quick, so let's go into a little bit more detail on this stock. I don't always go into this much detail on the videos because of time, but let's just show you for this one something quite interesting which I noticed. So total inventory. This is not a good sign to see. So this is a company's products. And generally with certain companies, certain manufacturing companies, if you see their inventories increasing, then to me that says their sales are slowing. Then to me that says their sales are generally slowing. It's just a rule of thumb metric to look at. So as you can see here, inventories here 121 2020 in March. Now their inventories are up by 143. So that's just interesting to see there. However, the good news is we can see they've got plenty of cash, $222 million, and only short-term debt, $66 million in short-term debt. And the total liabilities are only $128 million, which is it's about half of what they've got in terms of cash, which is nothing. So the company has got low debt, which is great. However, it is burning money as it continues to expand. So that is the risk with this business. Now, we're on to part 2 of my video. I'm going to go through this real quick for you guys just to show you a couple of stocks I'm looking at, the technical analysis, the charts, the buy points, quick overview, because I already did a previous video on this. Check that out, link below. So I went through Zoom and actually said that this point here, $369 was a buy point, and that was my support line. And I must have been a good analyst at that point or a little bit lucky, but the stock actually bounced off my support, which I thought it would do. So that was a good point to get in there. And then I'm expecting it to go back up, but it may also break through. So that's just something to keep an eye on. But at the moment, it is holding this support line, which I put in it, buy point of $369. So that's just one to watch for Zoom. Nvidia stock, fantastic company. I'm not really sure why this stock is down. I need to check their Q3 earnings, see if there's anything that's come up there. But it's down by around -6%. Now, that may not seem massive, but for fantastic companies, even a -6% drop can be a great time to get in there. So that's looking quite interesting at the moment. I reckon around this price or even up to $486 per share. They're good entry points, especially if you don't have any shares at all in Nvidia. Now, another stock, Teladoc, and I did a full video about Teladoc. It's basically the virtual healthcare provider. They've had a merger with Livongo. Very interesting company, but it's also part of the stay-at-home stocks, the stay-at-home plays for many people, and that's why we did see quite a major sell-off recently. So my buy point here, which I put in a while back, 196, it's broke through that, and it's onto my second buy point around 165, between 165 and 142. So that's quite interesting to look at there. It's way away from its moving average. So yeah, this could definitely be a great opportunity to get in there. But with this whole Pfizer news, it could drop much further. So that's just something to be aware of with those type of stocks. All these stocks I've made videos on them, so check them out. Watch the links below. Binge watch my channel because it's much more efficient and it's much more effective and it's much more valuable for you guys than binge watching Netflix. Believe me, you'll learn a whole lot more about stocks, about investing, which will allow you to become financially free. And if you enjoyed this video and you found some value, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm. And if you want more investing tips and exclusive stock market picks, which I'm personally investing into, then definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.